All right, good morning, everyone, and thank you for joining us today for the Federal Home Loan Bank of San Francisco's Affordable Housing Program General Fund application webinar for owner-occupied projects. We'll be going over the 2021 AHP application today. My name is Rose Wirtz, and I'll be one of your presenters this morning. My colleague, Robert Stiegel, will also be presenting. Okay, our agenda for this morning will provide an overview of the bank and the Affordable Housing Program's General Fund. Please note the new name this year. As of January 1st, 2021, we are under a new regulation where the program will be called the AHP General Fund instead of the AHP Competitive Program. We'll then go over the changes to the program, application, and worksheets, which are more extensive than usual this year as we adapt to the new regulation. We'll give you some insight into how we score applications and how we review the financials to determine need for subsidy and feasibility. And we'll end with a Q&A session. Please use the Q&A dialog box to type your questions throughout the webinar. Please do not use the chat function. We'll try to type responses to some questions as we go, and we'll answer the rest of them live during the Q&A session at the end of the presentation. Included in yesterday's email to all webinar registrants were several helpful documents that we will reference throughout today's presentation. You should have received a copy of the presentation, the application, the owner-occupied financial workbook, and scoring results from the last competition. So before we begin reviewing the application, I'd like to talk a little about the bank and the Affordable Housing Program, or the AHP General Fund. For those of you who aren't yet familiar with the Federal Home Loan Bank of San Francisco, we are a government-sponsored enterprise and a cooperative made up of member financial institutions that include commercial banks, credit unions, industrial loan companies, savings institutions, insurance companies, and community development financial institutions, all chartered in Arizona, California, and Nevada. The bank's mission is to enable families and households of all income levels to obtain quality housing and homeownership. First, the bank provides low-cost funding and other services that help member financial institutions make home mortgages and provide credit to people, neighborhoods, and communities. And second, the bank funds community investment programs that help members create affordable housing and promote community economic development. The Affordable Housing Program General Fund is the bank's largest community investment program. Since 1990, the bank has set aside 10% of its annual net income to support the program. The bank has awarded nearly $1.2 billion in AHP subsidies to produce nearly 145,000 units of quality affordable housing targeted to low and moderate income households. AHP grants are awarded through a competitive application process. The bank's member financial institutions, working in partnership with community-based housing sponsors or developers, submit applications for specific projects and programs. In addition, the bank has down payment assistance programs as well as an economic and community development grant program. So in the 2020 competition, the bank gave away approximately $38 million. We received 170 applications, and 50 of those applications received an award, which makes for an approval rate of 29%. All 50 of those approved awards were for rental projects. So this year, we've made some changes to the scoring for owner-occupied projects in the hopes that they will be more competitive. For this upcoming competition, we anticipate having a similar amount of funding available, although we're not sure of the exact amount at this time. So although this webinar is focused on completing the application, it might be helpful to just give a brief overview of the AHP process. The application must be submitted in partnership between a sponsor and a member. There is only one competition per year, and the upcoming 2021 application deadline is Wednesday, March 10th at 5 p.m. Pacific time. The award announcements will be made in mid to late June. Once an award is approved, both the sponsor and member must attend a compliance webinar prior to requesting the disbursement of the funds. Attendance at a compliance webinar is valid for 2 years. Note that the compliance webinar is different than this application webinar. Once a project has all permanent sources of financing secured, construction is imminent, and the sponsor and member have attended the compliance webinar, projects can request disbursement of the AHP funds. Every 6 months until project completion, each project must complete a short progress report called the semi-annual survey, which will be emailed to you. Awardees must complete construction, draw down and expend the AHP funds, and have homebuyers close escrow on their homes within 4 years of award approval. A project must show reasonable progress toward completion in order to maintain the AHP subsidy. Once construction is complete and the AHP award has been funded, the bank will conduct compliance monitoring, called initial monitoring, to confirm that the project fulfilled the commitments made in its original application. A request for initial monitoring documentation will be sent 6 to 18 months after the project is complete. Upon project completion, the income retention and compliance period for each unit will be in place for 5 years. Please make sure to refer to our policy updates located under the AHP section in the Resource Center on our website, as they provide important guidance about the entire AHP process. The AHP is a source of gap financing to develop affordable units or provide down payment assistance for eligible households. The maximum award amount for a project is $1.25 million. Note that this is the same as last year, but less than in previous years. Because members and sponsors apply together, they are partners throughout the life of the award. The AHP award is a subsidy structured in the form of a forgivable loan, secured by the member in the form of a promissory note and deed of trust. And that 15-year retention period you see on the screen is for rental projects. So for owner, it's a 5-year retention period. The AHP can only be used to assist those households at or below 80% AMI, and the program is structured in a way that rental and homeownership projects compete together, meaning that there's no specific set aside for either project type. And the AHP can be used to cover acquisition, construction, or rehabilitation costs for rental and owner-occupied projects. AHP awarded projects must fulfill scoring commitments. If there are project changes that affect the project's scoring, a modification must be requested. The modification process is a little different under our new regulation, which we'll discuss in more detail later on in the presentation. A project must demonstrate a financing gap and that it will be financially feasible. If the project receives AHP funding, it must continue to demonstrate that financing gap at the time of disbursement and at the time of compliance monitoring. Again, a project has 4 years to utilize the AHP funds, complete construction, and have all homebuyers close escrow. The bank will review the project status twice a year and follow up directly with projects that do not demonstrate reasonable progress or the ability to finish in 4 years. Projects awarded AHP funding must comply with fair housing and affirmative marketing requirements. Projects that are already complete, as in those with a certificate of occupancy or a notice of completion at the time of the application deadline, are ineligible to apply for AHP. Projects will also be ineligible if the closing to the home buyer has already occurred. For projects that already have an existing AHP award and need additional funds, you can only resubmit an application to request those additional funds if you first cancel the original award. Okay, so now we'll go over a summary of some of the key changes in the application for 2021. You can find a more detailed list in the reference guide, which is included in the application materials, as well as in the implementation plan, which is also available on our website. For scoring and eligibility, we've changed and clarified a number of items. Changes include the following. For sponsor affordable housing experience, the sponsor must now have a minimum of 3 years. The previous minimum was 1 year. The sponsor must have sufficient capacity to perform the project roles and responsibilities. For owner-occupied projects, the sponsor needs to be involved in the project, such as by exercising control over the planning, development, or management of the project, or by qualifying borrowers and providing or arranging financing for the owners of the units. Also, the sponsor must be able to certify that their organization has not engaged in certain misconduct as defined in the FHFA Suspended Counterparty Program regulation. I'm sure everyone has read that. For modifications, after receiving an award, a sponsor or owner must make a reasonable effort to meet the original application commitments or provide reasonable written justification for why those commitments cannot be met. As in the past, a good cause for the change will continue to be necessary. So what this means is that the modification will be a little bit different, and it may be necessary to document that an attempt to cure the issue and meet the original application commitments has been tried versus just providing a good cause for the change. And this is true for all existing AHP awards, not just projects awarded in 2021. We've also made some changes to our tiebreaker criteria. So this comes into play when projects score the exact same score during the round. So what we'll do is we'll go through these categories as we now have to tie our tiebreaker to our scoring categories. So first we'll look at the scores of tied applications under project readiness. If those projects are still tied, we'll move on to in-district projects. If they're still tied at that point, we'll look at housing for households requiring large units. And if they're still tied at that point, we'll look at the community stability criterion. And some changes to the application itself. So the AHP application now contains a self-scoring feature to estimate your project score prior to submission. You can use this self-scoring feature along with the scoring results from the 2020 round to determine whether your project might be competitive. Just keep in mind, the self-score tool is provided for informational purposes only, and it is not a guaranteed score. Your final project score will be determined based on your submitted documentation and will be made at the bank's sole discretion. Changes to the donated property category. The transaction must have occurred within 5 years of the application deadline. There was previously no time limit. Donation or conveyance at a nominal or below market price must ultimately be documented to maintain those points. Housing for households requiring large units. This is a new category that we've added worth 3 points. Projects will be awarded points for the creation of housing in which at least 25% of the total project units have 3 or more bedrooms. For owner-occupied projects, this is for units restricted to below 80% AMI. Nonprofit sponsorship, we have clarified that nonprofit sponsors with 50% ownership interest earn 2 points. Nonprofit sponsors with a 30% ownership interest earn 0 points. Finally, for subsidy per unit, the range for owner-occupied projects is now higher at its lower limit, so it has changed to $25,000. The new range is $25,000 on the low end and $45,000 on the high end to reflect consistent increases in construction costs. Some changes to promotion of empowerment. The maximum points available have decreased from 6 to 5 points. The subcategories of workforce development and financial literacy education have been combined, revised, and renamed training and education. The frequency of service requirement is bi-monthly or equivalent. On-site primary healthcare services has been replaced with healthcare services or programs, including mental and behavioral health services. And clarification has been added to confirm our existing practice that at the time of initial monitoring, the bank will require documentation to show that the service or program committed to an application is in place and appropriately serving residents, including validation of frequency and hours requirements. In project readiness, the maximum points available have decreased from 10 to 7. Building permit points have increased from 3 to 3.5, and the form has a new title. The zoning approval and zoning points have been removed. For community stability, the following changes have been made. Maximum points have increased from 13 to 14. Under revitalizing neighborhoods by optimizing project site use, we have split demolition and substantial rehabilitation into 2 separate options to adjust for new reporting requirements. Under transit, we have removed frequency requirements of at least 30-minute transit arrival times during rush hour, so submitting transit schedules is no longer required. Under sustainable developments, the Enterprise Green Community certification now earns 2 points instead of 1. Also under sustainable developments, we've added a new subcategory to recognize projects achieving net zero energy certification, and this will be worth 4 points. Under homeownership and economic integration, the location in middle, moderate, or upper income census tract subcategory has been changed to location in high resource areas or upper income census tracts. We'll be providing more information on that later in the presentation. Finally, under preventing or minimizing household displacement, documentation requirements have been updated based on the type of development, including relocation plan requirements for occupied existing buildings. Okay, a couple last changes. We have changed the targeting scoring for owner-occupied projects this year. So projects will now be scored using the following scale. If 20% or more of your units are for households at or below 65% of AMI, you receive 20 points. If less than 20% of the units are for households at or below 65% of AMI, you receive 18 points. And this change was made to recognize the difficulty of creating feasible projects geared toward home buyers at lower income levels, especially given increasing home prices and construction costs. For the AHP application financial workbook, the targeting and scoring tab now has a tally for units with 3 or more bedrooms to reflect the large units category. And we've also removed the subsidy per unit tab from the workbook. All right, moving on to completing the application. A couple things to keep in mind while you're filling out the application form. The application automatically adjusts based on the characteristics of your project. Progress in filling out the application is tracked at the top of the workbook and in each section. Applicants can easily jump between sections through hyperlinks within the workbook. Through icons next to each data field, the application form will also tell applicants what information is required and if each section is completed correctly. Make sure to read the instructions for each section and understand the scoring category requirements because there are a number of changes this year, a new scoring category, and the order of the scoring categories are different than in previous years. Please don't forget to reference and upload backup documentation if required for a scoring category. Too often, points are not awarded because documentation was not provided. Unfortunately, we cannot contact you during the round to ask for missing documentation. Make sure to address all error or warning messages. The application form is intended to help you get the right information in the right data format in order for us to score your application. Data fields with error messages will not be scored. Make sure that the information in the application is consistent. For example, the targeting in the application should match the targeting in the financial worksheets. Inconsistent information may result in a loss of points. Make sure that your application is 100% filled out before you upload your final version. This will be noted by the progress bar at the top of the worksheet. Almost all of the questions require a yes or no answer, even if the question doesn't apply to your project. Remember that it is best to fill out the application sequentially to avoid formula errors. Finally, take advantage of the self-score feature in the application this year to ensure that everything is filled out correctly. We've created maximum character limits for some of the text boxes on the application. Those text boxes are fixed in visual appearance and only expand when you double-click on the box. The text boxes should have enough space for the appropriate responses to be seen without having to double-click. However, if you do have more to write, you can always upload separate additional documents. The application now provides an estimated score to be used as reference only. The bank has final discretion in the awarding of points, and in the interpretation and implementation of scoring criteria shall be subject to the bank's sole discretion. Okay, submitting the application. Application documents must be submitted electronically through our online secure portal. To get started, the member and sponsor must complete and submit a request for a project-specific workspace folder on the secure portal for each application by March 3rd, 2021. So that's a week before the actual application deadline. For each application, the member and sponsor can authorize up to 5 employees to submit documents through the secure portal workspace. We will notify the designated member and sponsor representatives via email to complete authentication to get access for each workspace. As you upload your completed application, combine supporting documentation into one document file for each folder. While the portal allows you to upload multiple files to one folder, only one file can be accepted into our systems. So if files are not combined, we may not receive important backup documentation needed to score your project. Keep the application form and financial workbook as Excel files in the appropriate format. A couple other things to keep in mind when uploading documents. Make sure documents that need signatures have a scanned signature. We can also accept DocuSign this year. Do not rename, move, or delete the folders. This can cause us to not receive your documents, which could jeopardize your project score. If you re-upload an updated file to the same folder, it will overwrite the existing one. Do not submit documents without redacting personal information such as social security numbers, driver's license numbers, or bank account numbers. Do not upload encrypted documents because they cannot be imported into our system. And make sure that everything you upload by March 10th is what you intend to submit. You will not be able to upload anything after that. And please note that there is no submit button in the portal. Whatever you have uploaded in your workspace by the deadline is your final application package. And lastly, make sure that the secure online portal website is not blocked by your IT department, or have them unblock it so you can access the workspace.
Okay, so I will take us through the submitting and the rest of the slides here in the second part. So for submitting an application in the secure portal, only one PDF per folder should be used. Combine multiple files into just one file, and then only one file can be accepted into our system. So if you upload multiple documents, it is likely they will not all be received and you may lose some points. Remember that we cannot contact you during scoring. Speaking of scoring, we will go over the scoring overview now. So as we go through the application, this is how the total 100 points for the application are allocated for the 13 scoring categories. Most of the categories are straightforward. All categories are now self-scorable. It's actually impossible to get all 100 points since this is an open, competitive application with both rental and owner-occupied projects competing side by side. Some questions are only relevant to rental projects while others are only relevant to owner-occupied projects. This keeps the scoring balanced and levels the playing field for both types of projects. As I go through each of the categories, note that there will be categories where all applicants typically get full points or score well in. And then there are categories where not every project will get points. It's in these categories that a project can have a scoring advantage in the application process. Take a look at the 2020 scoring results and the materials we provided for the average score of last year's approved projects. Be aware that we do not have enough time to contact you during the scoring process, so please double check that your submitted documentation is uploaded and clearly shows that your project meets the requirements of the category. If documentation is insufficient, we will not be able to award points. So next, I'll go over the application scoring itself. Feel free to follow along with the copy of the application in front of you. Our first category is targeting. It is worth up to 20 points, which is the largest amount of points possible in any one category. Rental and owner projects are scored separately. This is an extremely competitive category, meaning most approved applications receive full or near full points. We changed the targeting for lower income households. So an owner occupied project must have all units restricted at or below 80% of AMI to be eligible for AHP funding. Projects will be scored using the following scale. If 20% or more of the units are for households at or below 65% of AMI, it's worth 20 points. If less than 20% of the units are for households at or below 65% of AMI, that is worth 18 points. On the application, you enter only the number of income restricted units and their corresponding AMI levels into the yellow shaded cells in the table. The gray cells will be activated and turn yellow once the number of units are entered in the cells. Make sure to enter only whole numbers with no decimal places or you will get an error. Information in this section must be consistent with the targeting and financing sources worksheet in the workbook. In the last competition, all approved projects received the full 20 points. Donated property is our next category. Points will not be awarded if less than 20% of project units or land associated with the project meets the category criteria. Points can be prorated if not all the units qualify. There are 3 situations that qualify for points. First is a straight donation. If the site is acquired or to be acquired from an unrelated third party for $1,000 or less, or a long-term land lease is executed for $1,000 or less in annual rent, then the application is eligible for up to 5 points. If this scenario is relevant to your project, complete the first section titled donation of property. Next is acquisition of property from a federal agency. If land is conveyed from a federal agency at a price greater than $1,000, then 1 point will be awarded. If this is the case for your project, complete the middle section. The third way to get points is if land was acquired from an unrelated third party at a significant discount to fair market value. For example, if you have a property with a fair market value of $1 million and your purchase price is $200,000 or 20% of fair market value, you get 1 point. If the purchase price is $150,000 or 15% of fair market value, you get 2 points. If the purchase price is $100,000 or 10% of fair market value, you'd get 3 points. And finally, if the purchase price is $50,000 or less, or 5% or less of the fair market value, you'd receive 4 points. For all of these situations, the donation or conveyance must be an arm's length transaction. Also, conveyances that come with any financial conditions or strings attached are not considered donations. You do not need to submit documentation in order to get points. If the property has not yet been donated, but will be at a future date, the bank will give credit for legally binding, fully executed purchase contracts, lease agreements, and options, or an exclusive right to negotiate with specific purchase or lease costs. Transfer of title from donor to the sponsor does not have to take place prior to submission of the application to receive credit. As a reminder, points can be deducted if the transaction doesn't materialize, and a reduction in points could jeopardize your award. So you want to make sure that the donation is a sure thing when requesting points in this category. For acquisitions at an amount significantly below fair market value, an appraisal must be submitted with the application and must have been ordered by and for the benefit of an institutional lender and or public agency for the purpose of providing financing to the buyer of the property. Also, the appraisal valuation date must be within 6 months of the acquisition agreement date. Information for all documentation should be consistent with the address and APNs or parcel numbers indicated at the top of the application. Make sure there is a clear linkage between the parties in the documentation submitted. Project sponsor, seller, or donor of the property, etc. Also, make sure the donated or conveyed amount should be consistently reflected in the development budget. This is the link between scoring and the financial review. We do confirm that there are no acquisition costs, or there are just the nominal costs in the budget. For properties that were donated or conveyed at a nominal or below market price prior to application, transaction consummation must have occurred within 5 years of the application deadline. Donation or conveyance at a nominal or below market price must ultimately be documented to maintain points. Under the donated or conveyed property section of the application, you must enter the number of units that apply to each situation. If none of the situations apply, you must enter 0. In the last competition, one of the 50 approved applications received points in this category. The next category is nonprofit sponsorship. This is an overview of how the 7 points are allocated in this category. First, the bank has discretion in determining whether a nonprofit sponsor meets the category and general sponsor eligibility threshold requirements. The nonprofit status of an organization is now a threshold criterion, and you would be eligible for the remaining points as long as the 2 statements under the sponsor classification section are true and you are a qualifying organization. The general sponsor eligibility requirements have changed this year and are: the sponsor has been engaged in the ownership, management, or development of affordable housing for a minimum of 3 years. the sponsor has sufficient capacity and staff experience to perform project roles and integral responsibilities. In the case of owner-occupied projects, the sponsor needs to be integrally involved in the project, such as by exercising control over planning, development, or management of the project, or by qualifying borrowers in providing or arranging financing for owners of the project, of the units. Please note the entities that qualify for points are a nonprofit organization, Native American tribe, an Alaskan Native village, or the government entity for Native Hawaiian homelands, a state housing agency, local housing authority, and a state or political subdivision of a state. For owner-occupied projects, there is a regulatory requirement that the project sponsor must be integrally involved in the project. The first 4 points are based on the nonprofit sponsor's material involvement in the project. See the provided list of integral responsibilities. Obtaining the full 4 points is accomplished by fulfilling 4 of the 8 listed responsibilities. Most of the time, the nonprofit sponsors of owner-occupied projects are involved in more than 4 activities. Each item is worth 1 point, but you can only receive up to 4 points total. Note that you should provide a detailed description of the nonprofit's involvement in the project sponsor profile section of the application, and make sure that the narrative is consistent with the boxes checked under the nonprofit sponsorship scoring category. Do not just restate that the entity will be involved in just 3 items, but provide details of specific activities. The last 3 points are awarded based on the percentage of the total available developer fee received by the nonprofit sponsor. The developer fee received is the quantitative side of the nonprofit sponsor's integral involvement, as just noted. If the nonprofit sponsor receives equal to or greater than 25% of the developer fee, or if there is no developer fee, then 3 points are awarded. If the nonprofit sponsor receives less than 25% of the total developer fee, then 0 points are awarded. Make sure to select the correct response here. If you respond that the project has no developer fee and we note a developer fee in the budget, you might not receive the 3 points. As proof of tax exempt status, a nonprofit organization must submit the IRS 501c3 letter, or you can submit a state franchise tax board letter. The bank does not accept bylaws or articles of incorporation as a substitute for showing tax exempt status. If there is an entity name change, please submit the updated IRS documentation. If the sponsor is a government or tribal entity, then no documents are required. In 2020, 90% or 45 of the 50 approved projects received the full 7 points. Our next category is home purchase. If at least 20% of units are reserved for first-time home buyers, then you can get up to 6 points. All points will be prorated based on the percent of units set aside for first-time home buyers. Our definition of a first-time home buyer is listed here, and qualified home buyers must meet one of these criteria. In the last competition, no approved projects actually scored in this category. The next category is homeless housing and has a maximum of 6 points. Although rare for owner-occupied housing, points are awarded to projects that create home ownership opportunities for homeless individuals or households. The AHP regulation requires that the bank provide or set forth a homeless definition in the implementation plan. In 2017, we updated the definition of homelessness as well as the documentation requirements for this category. We also removed language from the definition that prohibited formerly imprisoned individuals from qualifying as homeless. Unfortunately, what still does not qualify for points are those at risk of homelessness, such as a person living in an overcrowded condition, living in a hotel or motel not paid by charitable funds, or living in the home of another individual due to economic hardship. For all of the details, including documentation required at initial monitoring, please review the scoring category in the implementation plan. It is important to note that these changes are not effective retroactively and only apply to projects awarded in 2017 or later. Scoring in this category is slightly different from other unit-based categories where points are simply prorated based on the number of units reserved. For this category, you get an automatic 3 points if a minimum of 20% of units are reserved for homeless households. The remaining 3 points are prorated based on a ratio of the remaining units that are reserved for homeless households. The bank is trying to encourage projects to reserve units for this population. In the application, you must describe the homeless program in the text box provided, including a description of outreach activities and referral agencies used. Since it's extremely rare for owner-occupied projects to target homeless households, we will review this section carefully if you request points under this category. Also, please note that the units set aside must also be indicated on the targeting and financing worksheet. To get points, they must match what is indicated on the application. In 2020, 86% or 43 of the 50 approved projects received some amount of points here, although no owner-occupied projects received points for homeless households. So next up, we have our special needs category. Up to 5 points are awarded based on the percentage of units reserved for special needs populations, those that fall into the 5 categories listed here. A minimum of 20% of the units must be reserved to get any points, and points will be prorated if not all units apply. For example, if 50% of the units are reserved for one or a combination of these populations, you get 50% of the points. There is no double counting for this category. As you can see from the application, there are multiple categories possible. You will not receive credit for more than one designation for the same unit. More than one of these designations can apply to the same unit, but you will get an error message if the number of units input the application exceeds the total number of units in the project. Also, please note that in the financial workbook, the units set aside for special needs households must be indicated on the targeting and financing sources worksheet. To get points, they must match what is indicated on the application. In the last competition, approximately 84% or 42 of the 50 approved projects received some amount of points in this category. Next up is our new category this year, and we're hoping this will help owner-occupied projects be more competitive. So it's fairly straightforward. At least 25% of the units restricted at or below 80% AMI have 3 or more bedrooms to qualify. For example, if 7 of the 20 project units have 3 or more bedrooms, it would be 7 divided by 20, which equals 35% of the units, or 3 points total. For this, the units must be consistent on both the application and targeting worksheet in the financial workbook to score. Our next category is rural housing, and it's also pretty straightforward. If at least 20% of the units are located in a rural area as deemed by a government agency, then you can receive up to 5 points. Points are prorated, and rural status can be designated by a state or federal government agency, such as the USDA. USDA provides this information at their website under Rural Services. In the application, list or describe the agency designating the area as rural after the number of units typed in. You must submit documentation from the designating entities to support your claim. If this information is not provided, the response is considered incomplete and points will not be awarded. In Arizona, rural area can be as designated by a Native American tribal entity. In the last competition, 4 of the 50 approved projects received points in this category. Our next category is promotion of empowerment. The purpose of this section is to see how your project will financially or economically empower the home buyers through programs or services. There are 7 services or programs. Each service or program is now worth 5 points on its own instead of 6 points like in years previous. Review the instructions and the notes following each question in the application. Much of the information we want to see in the submitted documentation is outlined there. You get 5 points if you meet the scoring guidelines. If you don't meet the threshold, then you get 0 points. There will not be any prorated or partial points given in this category. Services must be of a regular and ongoing nature and free to all homebuyers, with the exception of childcare. Services must be available within 6 months of the project's completion, except for pre-purchase home ownership counseling, which we would expect to be offered below the home buyer's close before the home buyer's close escrow. Documentation is required at initial monitoring to substantiate the provision of services. And if the sponsor is providing the services themselves, then a detailed service plan must be provided. To get credit for a sponsor provided service, the organization must have in-house capacity to provide the service with staff that has appropriate knowledge and expertise. Use the organization's letterhead and then date and sign the services plan. If the project sponsor hires or contracts with a third-party service provider, then the documentation must include one of the following documents: a Memorandum of Understanding or MOU between the sponsor and the third-party organization, an executed service contract, or a letter of commitment. These documents must list the services and funds which partnering agencies have agreed to provide. Service commitment documents must be dated within 6 months of the application deadline. If you have an MOU that was executed beyond the 6 months, but the services detailed in the MOU will still be provided to the project residents, then you can have the partner or service provider submit a current cover letter stating that the MOU is still valid and all indicated services will still be provided. Letters of support are not acceptable documentation for provision of services in the empowerment section because they are not a commitment, but are more like references. For example, this includes letters written by people or organizations that support the project sponsor and its work, but are not formalized commitments outlining the provision of services. Also, you must complete the empowerment budget worksheet, which should show annual projected expenses of the service, and you must indicate how the projects will pay for these expenses. If this is not filled out, no points will be awarded. This budget is now included in the financial workbooks, so please fill out this worksheet instead of submitting a separate budget. For the sweat equity feature, remember to input the number of hours in the targeting and financing worksheet and submit the sweat equity agreement template to be used. Do not just assume we know you will provide the services of pre and post home ownership counseling. Submit documentation with a curriculum for the counseling program. If another entity is providing the service, submit the documents as we talked about earlier with details about that provider's curriculum. In the last competition, all awardees received the full points in this category. I'm going to turn it back over to Rose here, and she will take us through the community stability category.
Thank you, Robert. So the community stability category is about determining how your project benefits the community at large and contributes to stabilizing the neighborhood. This category is worth up to a maximum of 14 points, as opposed to last year's 13. There are 6 main community stability features with specific elements under each feature that you can select. The specific point allocation for each feature can be found in the scoring guidelines in Attachment B to the bank's implementation plan. No partial points will be given, and again, you must submit required support documentation for each selected element in order to receive points. Like the rest of the application, even if some of the questions do not apply to your project, you will have to confirm that the question does not apply by selecting none or no. So now let's look at the features a little more closely and how the points are allocated. Feature 1, revitalizing neighborhoods by optimizing project site use. The feature is worth a maximum of 3 points. Note that we have split the demolition or substantial rehabilitation of vacant, abandoned, or substandard buildings, which includes the preservation of affordable housing, into 2 separate questions for reporting purposes. To receive the 3 points under this feature, your project must involve either development of an infill site, adaptive reuse, demolition of a substandard building, or substantial rehabilitation. The points will be awarded if you select one of these elements and submit the required documentation. Although it's already stated in the application, just to reiterate, under revitalizing neighborhoods by optimizing project site use, development of an infill site, a dated aerial photo of the site showing the outline of the entire site must be provided to receive points. Otherwise, we may have trouble determining the boundaries of your site and could be unable to award those points. To receive points for demolition, the demolition must be undertaken by the sponsor and demolition costs must be shown in the project budget. Points cannot be awarded for demolition that was undertaken on the site prior to your project or demolition that was undertaken by another entity. A demolition contract is not required, but documentation must clearly show the substandard condition of the existing buildings to qualify for demolition points. Feature 2, community revitalization or economic development. This feature is worth 2 points. To receive the 2 points, select one of the boxes and submit the documentation. Note that the project must be within a specific area with specific development goals. A general housing plan does not qualify for credit. Just a note on redevelopment areas. Although redevelopment agencies have been dissolved, it is still possible to get points for location in a redevelopment area. However, we must be able to see through your documentation that redevelopment activities are still ongoing in the redevelopment area. For example, submitting a redevelopment plan from 1992 with no mention of whether or not it is still active will likely not result in points being awarded. Feature 3, proximity to transit and amenities. This feature is worth a maximum of 4 points. To receive points under transit, the project must be located within 1/3 of a mile of the specific transit stop. 1/2 point up to a maximum of 2 points will be awarded for each transit service or line. Similar to the transit component, to receive points under amenities, a project must be located within 1/3 of a mile of the specific amenities that are appropriate and accessible to the project residents. For example, if the project is located next to a veterans medical clinic, but homes are not necessarily going to be purchased by veterans, we would not award points for that amenity. 1/2 of a point up to a maximum of 2 points will be awarded for each of the 8 indicated bulleted items in the application. Note that you will not receive more than 1/2 point for each of the categories. So if there are 3 parks near your development, you will only receive 1/2 point for one of those parks. Some important things to keep in mind. To receive points under this feature, the transit service or amenity must be in place at the time of application. For transit, the frequency requirements of at least every 30 minutes during rush hour has been eliminated. So schedules are therefore no longer required. However, we do still need a route map with this project site identified so that we can tell the routes are unique and don't have overlapping destinations. The application outlines how the distances to transit and amenities should be measured and the required documentation. No points will be awarded without documentation or if your documentation is missing information needed to determine distance or destination. Feature 4, sustainable developments. This feature is worth a maximum of 4 points. Points will be awarded for obtaining one of the indicated certification levels. The first level is worth 1 point, the second is worth 2, the third is worth 3, And the fourth level is new this year, and it's for LEED certified projects with net zero certification. As a reminder, this year we did change the Enterprise Green Community certification to be worth 2 points instead of 1 based on some industry research. One essential thing that we'd like to emphasize here is that you should not overcommit. So if your sustainable development commitment is not met, this would lead to a future project modification involving a loss of points, and that could jeopardize the project's award. Also be aware that new construction projects are not eligible for points related to improvement over an existing HERS rating. Scoring credit for this type of certification is limited to rehabs. Feature 5, homeownership and economic integration. 1 point will be given for the creation of homeownership opportunities. This year, the location of a project being in a middle, moderate, or upper income census tract has been changed to a location in a high or highest resource area where this designation exists. For example, in California, using TCAC's opportunity area maps, or to an upper income census tract in areas that do not have this type of designation. This is worth 1 point. Do not miss out on points for location in the indicated areas. Even if you're absolutely certain that your project is in a low-income census tract, please just check on the FFIEC website or your tax credit agency's opportunity map and enter the project address to confirm. All project units, including scattered site projects, must be located in the high or highest resource area or upper income census tract in order to qualify for this point. There will be no point proration. Note that you may choose to utilize the census tracts, census block group, or resource designation from the high or highest resource maps in effect when the initial site control was obtained up to 7 calendar years prior to the application. If you go this route, make sure to make this intent clear in your Evidence of Community Stability PDF and include site control documentation along with those older maps. Feature 6, preventing or minimizing household displacement. There are new designations for this section. 1 point will be awarded for no household displacement, and this is for sites that are vacant and unoccupied, or sites where the project is occupied and an acceptable relocation plan is in place. To receive 1 point for no displacement, you must provide a written explanation of the project site history and confirm why no displacement is taking place. To receive the point for displacement with relocation, you must submit a relocation plan. If a project involves relocation, then we expect to also see those relocation expenses in the project budget along with the acceptable relocation plan. We'll go into detail on what that acceptable relocation plan will look like in a few minutes. And just so everyone knows, in 2020, the average score for approved projects in the community stability category was 10.05. So here's a good example of documentation for the number of transit lines near the project. This example clearly shows where the project site is, the distance radius surrounding the project, 1/3 of a mile, and the distinct transit lines that are within that area. It also shows a clear scale and legend from a third party. So it's very important for both transit and amenities documentation that the third party scale and legend is included, as we had a number of projects lose points in this area last year because the third party scale was missing. This gives us certainty that the information provided is accurate. Otherwise, we can't tell if it was just created by the applicant. The implementation plan provides specific requirements for a relocation plan. If your project is required to go through a relocation plan process by one of its other funders, it is likely that this change will not affect the documentation you would normally submit. However, for projects without other funding sources, pay close attention to what is required here, as not providing an adequate plan will result in a loss of points. The documentation for the relocation plan is as follows. You can submit either any plan provided by federal, state, or local government funders involved in the financing of the project, or a relocation plan containing the following: a resident notification strategy to inform tenants of the relocation, and that should be based on the extent of the renovations and how long they might need to be out of their units. Explain the accommodation measures to be implemented. Explain the temporary relocation planning, and this is whether you're moving within the property to a different unit, storing personal property on site, moving to a hotel for a certain period of time, or other alternatives. Explain permanent relocation planning if an occupant happens to request that, and also make sure to include a relocation budget categorizing the relocation costs and an anticipated average cost per household. If you do not have a plan approved by federal, state, or local government funders, you can write your own plan. Just make sure it meets all of the points in this slide, including the budget. Project readiness. So in the project readiness category, points are awarded to projects that have demonstrated viability by meeting certain development milestones, obtaining site control and being permit ready or having building permits. Zoning approval and its related documentation, which was previously attachment 9A, has been removed as a scoring criterion. So now there are only two ways of scoring for this category: obtaining site control and being permit ready or having building permits. If you have a scattered site down payment assistance program with no construction or rehab, you automatically receive 3.5 points in lieu of site control and building permit issuance. If the project involves new construction or rehabilitation, then points are awarded based on fulfilling the two project milestones. The questions are ordered sequentially to match these milestones, and you must get points in the preceding question before qualifying for the next question. So this means you cannot get points for building permits unless you have full site control. Points are also prorated if the questions are not applicable to all units. 3.5 points are awarded for full site control. Documentation must be submitted as evidence for the different options listed in the application, either a final settlement statement, title insurance policy, executed disposition and development agreement, or title report. 2 points are awarded for partial site control. This would be evidenced by an executed purchase agreement, option to purchase agreement, or exclusive negotiating agreement. Again, documentation must be submitted in order to receive points. For all projects, if a project only has partial site control, the project will not qualify for permit readiness points, as I stated earlier. The sponsor must have the ability to develop the site by either having ownership or full control of the site prior to getting points for having those building permits. Documentation must be fully executed and valid and is required for all parcels. It must be clear that the project sponsor or partners have site control on the documentation, or additional evidence must be provided showing that there is a link to the sponsor. Make sure that the addresses and assessor parcel numbers, or APNs, dates, and signatures are consistent and on all forms as appropriate, especially if this information is in an exhibit to the main agreement. If you have full site control in place, then you can qualify for points under building permit issuance or building permit readiness. To get credit for building permit readiness, the building permit readiness form must be signed by the building department, and a copy of the building permit readiness letter or the permits themselves must be submitted in order to receive 3 points. For projects on Native American tribal lands, a proxy letter from the tribal council or entity is acceptable in lieu of the building permit readiness form. Just a note here, there's a new building permit readiness form, and a new form must be submitted every time the application is submitted. So if you've previously submitted this in a past round, you need to fill this out again. Also, if you don't have full site control, you will not qualify for points for having a building permit readiness letter. On the application, even if some of the questions do not apply to your project, you will have to indicate that 0 number of units apply under the question. For all types of owner-occupied projects, you can get 3 points for providing a list of identified home buyers that are income qualified. The list of eligible home buyers should include names, family sizes, addresses, AMI information, and household income, which must correspond to the information in the targeting and financing worksheet. Points will not be awarded for home buyers whose incomes exceed the income targets or who do not qualify for mortgage amounts necessary to purchase homes for the project. Points in this category are capped at 7, even though you could conceivably be eligible for more. In 2020, 18 of the 50 approved projects received full points in this category. In district projects, this is also a very straightforward category. Points are not prorated, so basically if your project is located in Arizona, California, or Nevada, you will receive the full 5 points. If your project is located anywhere else, you will receive 0 points. On the application form, the question is automatically answered based on the address provided at the top of the application. Last year, all 50 projects that were awarded were in district. Subsidy per unit. The subsidy per unit category is worth up to 12 points. In the AHP, there isn't a maximum or minimum subsidy per unit, but keep in mind that each project may request up to a maximum of $1.25 million, and the member limit is $15 million. However, since this is a competition, you get more points the less subsidy per unit you request. So basically, the score is calculated by taking the amount of subsidy requested divided by the number of income restricted units, those that are restricted to households earning at or below 80% of AMI. The scoring for rental and owner projects is different. For owner-occupied projects, to get points, the range is between $25,000 per unit and $45,000 per unit, with a full 12 points being awarded for $25,000 per unit and 0 points for $45,000 or more per unit. The previous lower limit was $15,000, and now it is $25,000 to acknowledge the persistent increase in construction costs in the industry and the increase in our down payment assistance programs to a maximum of $22,000 per unit. So we often get the question, how much funding should I request? And we encourage applicants to request what the project truly needs to fill the financing gap. However, you may need to balance what your project needs with what score will make your project most competitive. In 2020, the average score of all approved projects in this category was 11.48. So that concludes the review of all the scoring categories. And now we're just going to move on to this application score summary. And this slide shows a breakdown of each scoring category in the application e-form. This will also be found at the end of the application. That's a new feature this year. So make sure you review this summary to ensure that everything has been entered accurately and the score reflects what you think it should.
Okay, it is now 10:45, so I will take us through the rest of the webinar here. In this next part of the webinar, we will provide information on how we evaluate a project's need for subsidy and feasibility and go over the financial workbooks. Not only do applications have to score well, but they must also meet the Federal Home Loan Bank standards to demonstrate that the amount of subsidy requested is truly needed and that the project is also financially feasible. In determining need for subsidy, we look at the financials to make sure that the project demonstrates a financing gap. We look at the project's financing structure and development costs to see that AHP is filling a project's financing need that's not covered by other funding sources, and that the project is only asking for enough AHP to truly fill the gap. We look to see that the project's sources of funding, including the AHP, equals their projected development costs. For financial feasibility, we make sure there are no remaining financing gaps after the AHP is factored in. We review expected home buyer monthly housing payments and home sales prices to make sure those home buyers can afford the units and that projected home prices are reasonable. For financial benchmarks, we use these to help evaluate the need for subsidy and feasibility that projects must meet. These benchmarks are updated often to try to reflect industry standards, and if your project deviates from a benchmark, an explanation must be provided. And please be aware of the note at the bottom of the slide. A project must demonstrate need for subsidy and financial feasibility at application, disbursement, and compliance monitoring. In evaluating need for subsidy and financial feasibility for owner-occupied projects, some of the main items we look at are whether or not sources of funds for development equal the cost to build the home. If not, why is there a discrepancy? A difference can be a cause for ineligibility because having too many sources means the project doesn't demonstrate a need for some or all of the AHP. And on the other hand, not having enough sources means the project still has financing gaps that aren't being filled and the project isn't feasible. Are the development costs reasonable and customary? If a line item seems excessive or atypical, we would expect an explanation. For instance, there might be an extraordinarily high local impact fee from the city that we've never encountered. Since no project is exactly alike, we try to understand all the different set of circumstances surrounding each one. We also verify whether benchmark deviations are explained. For example, potential home buyers shouldn't pay more than 35% of their income towards their monthly mortgage payments. If exceeded, we would need a good explanation from the applicant. And for construction of new units that do not involve self-help or sweat equity, as mentioned earlier, we require a market study to demonstrate the marketability of the units and that the projected sales prices are reasonable. A couple of things to mention on the financial workbook. Please use the version that comes with the application packet you download. You should see version 5.1 in the top right corner of each worksheet. Instructions and notes on completing the financials are included in the workbook on the first tab. We strongly recommend that you read this prior to completing the workbook. Worksheets should be filled out sequentially starting on the second tab of the workbook with the targeting and financing sources worksheet. The worksheets are all connected and figures and amounts are automatically pulled into other sections of the workbook. You can only enter data into unshaded cells. The shaded cells are locked and can't be altered. Again, review the worksheets so that they are accurate and consistent before submitting them. In particular, please make sure that the sources in the workbook match the source documentation provided. Note that we rarely allow changes to the workbook after it has been submitted. So now we will review the actual owner-occupied workbooks. So for this tab, the instructions and notes worksheet, we highly recommend that you review this worksheet while you complete your workbook. It contains a lot of helpful instructions and policy guidelines. For our targeting and financing sources worksheet, enter the current 50% AMI or very low income adjusted for the family size based on the 2021 HUD income limit guidelines. If available, if HUD doesn't release the 2021 income limits by the deadline, use the 2020 limits, and you would input those in the top left of this worksheet. Enter the number of proposed units for each AMI target level and configuration. The AMI data on each unit is linked to the targeting self-score worksheet we provide in this financial workbook. If you already have identified home buyers and know their family income, still only input their percent of AMI. The worksheet automatically calculates the family income, and it is okay if it is not exact. Enter the number of bedrooms and assumed family size, and financing sources such as the amount of AHP per family and buyer down payments and first mortgages. If applicable, indicate which units are reserved for homeless or special needs. The number of units reserved must be consistent with the homeless and special needs application scoring categories to receive credit. Indicate the terms, rates, payment terms, and status of funding commitments for each funding source for home buyer purchases. Documentation of approved sources of financing must be provided. Enter sweat equity hours if applicable. This would be mostly for Habitat or USDA projects. And you can enter that in the top right here. If the sponsor is providing discounted financing, for example, 0% mortgages, indicate yes in the box and complete the discounted financing calculation. If the project is a self-help project financed by the USDA RD 502 program, indicate yes in the box. Any additional payments for second or third mortgages must be calculated and entered manually under other payments. Enter other applicable items such as taxes and insurance, homeowner dues, etc. To ensure consistent and reasonable rate assumptions, interest rates and spreads should be set in accordance with the interest rate assumptions guidelines, which can be found in the reference manual. Total purchase price figure auto-populates in the development budget to compare with the total development costs. We are looking at what the applicants are selling the homes for and seeing if the housing expenses are reasonable. If there are too many sources, there may not be a need for the AHP. And if there are too few sources, the project may not be feasible. Note the total committed funds field. This is what we use as part of our tiebreaker. So next is our sources of fund summary worksheet. This worksheet collects data required by the Federal Housing Finance Agency. Please indicate which sources are applicable to the project. This is only relevant to permanent financing. Exclude construction and bridge financing. Include HUD, USDA, and VA financing under other federal housing programs. If a source does not fall clearly within the listed categories, select Other. For the development budget worksheet, select the building type in the top left corner for condos, single-family homes, or townhomes. Enter the average square foot per home. Enter the acquisition costs and development costs by line item. Explain any discrepancies or differences between the sources and uses of funds in the space at the bottom of the worksheet. There are situations when financing sources are not required to be secured against the property and will not be reflected down the road in the HUD-1 settlement statement. If you have a situation similar to this where the sources are less than the uses on the worksheets, then please explain in the development budget comment box. If AHP funds will be used as down payment assistance for the purchase or existing of existing homes with no rehabilitation, enter the acquisition prices in the development budget under purchase of existing houses. The targeting worksheet must reflect a reasonable estimate of the sales prices of the homes to be purchased by eligible home buyers. Ensure acquisition cost is consistent with readiness and donation sections of the application and that documentation is provided. List cash items only. Do not include non-cash costs which are in the budget as both a source and a use, such as donated land, accrued soft loan interest, appraised value of land, volunteer labor, pro bono services, fee waivers, or expenses to be reimbursed. Include site improvements under the on-site and off-site improvements line items and not under land costs. The construction management, sponsor managed, and project-specific line item should not include other overhead costs or those that are unrelated to the construction of the project. Include other overhead costs in the developer fee line item. Documentation for construction management costs will be required at initial monitoring if the project is approved for an award. Closing costs are those to be paid by the developer, not the home buyer. And finally, for self-help projects, if a lot is sold by the sponsor to the home buyer for a sales price that exceeds the cash cost to purchase and develop the lot, the difference between the sales price and the cash cost is considered developer fee. So moving on to the discounted financing worksheet. If the sponsor is providing discounted financing for home buyers, then you will need to complete the discounted financing worksheet. For example, Habitat for Humanity sponsored projects that provide 0% mortgages to home buyers would need to fill out this worksheet. For this worksheet, the total adjusted sources of financing must equal the total uses. For a promotion of empowerment budget, this worksheet ties to the scoring of promotion of empowerment. No empowerment points will be awarded if this worksheet is not completed. Include sources of revenue that will be used to pay for home buyer programs or services. At the top, include all expenses related to those services, and then the total revenue minus the total expenses should equal 0 at the bottom of the sheet. For our benchmarks worksheet, the base information for the benchmarks worksheet will be auto-populated for you, except that you will need to manually compare your project's information with the benchmarks for RS means and interest rate assumptions, both found in the reference guide. Provide detailed explanations of and supporting documentation for all benchmark deviations, such as requirements of other funding sources. Deviation explanations must be quantifiable in relation to the amount the benchmark is exceeded. If a project's costs exceed the gross residential square footage cost estimates provided by the RS Means Company, a written explanation complete with supporting third-party documentation, such as an architect or general contractor estimates, is required. Remember to input the project's RS Means maximum construction cost per square foot limit within the construction per square foot benchmark explanation. For a targeting self-score worksheet, this worksheet is used for informational purposes only, but it will help you give an idea of what your score will be in the targeting category. And finally, we have the AHP application comparison. This worksheet is intended to help you maintain consistency between data in the application and data in the financial workbooks. When you have finished filling out both documents, click the Run Comparison Now button to identify any inconsistencies if any errors are noted. Fix them and run the comparison again to make sure the issue is resolved. So that concludes the need for subsidy in project feasibility review segment of the presentation. Okay, sorry about that. So for accessing the application package is on our website. The form to register for the secure portal access is also on our website. In fact, you can register for an application workspace on the secure portal right now in anticipation of submitting an application. If you have additional questions beyond what is covered here or answered during the Q&A session, please contact one of us and we will be happy to help get you your questions answered. Note that there are 2 sets of contacts, one for setting up your secure portal workspace and 4 other contacts for questions about the AHP application scoring and feasibility. So now we will go to the Q&A session and it'll take us a minute or 2 here, then we'll start answering the Q&A sessions